What's the difference between a debit spread and a credit spread? Both options trading strategies are considered vertical spreads. That means that both strategies include the buying and selling of an options contract at the same expiration date for different strike prices. Here are examples of a call debit spread and a call credit spread on the S&P 500. Example number 1. As you can see, we are buying the $370 strike call option on the S&P 500. This is considered our long leg. Simultaneously, we are then writing or selling the $375 call option. This is considered our short leg. Notice my max loss on this trade is the cost of entry at $130, and my max gain is the difference, the spread, at $5 times 100, so $500. For this trade, ideally what I want to see is the stock to move higher and go above $375. This example is an example of a call debit spread. It's called a debit spread because it requires a debit up front. A debit is just fancy terms for you having to pay to get into this trade. Example number 2. For this example, you can see that we're writing or selling the $370 call. This is our short leg in this example. Simultaneously, we are then buying the $375 call. This is considered our long leg. For this trade, however, I do not want the stock to rise, and I want it to be below $370 at expiration. Notice that for this trade, my max loss exceeds my max potential gain. This example is a credit spread. It's called a credit spread because I receive a credit up front. For this trade, I don't have to pay anything to get into the trade, but with a credit spread, I have a much higher risk. When comparing debit spreads against credit spreads, debit spreads have lower overall risk, higher potential gains, but have lower probability of success. Credit spreads have higher risk, higher probability of success, but lower potential gains. I myself prefer trading debit spreads. Over the last month, we have hit on over 10 trades that have been multi-baggers, posting over 200% returns. All of these trades were debit spreads, and all of them were posted on the private Discord. A link is provided in the bio. Now, if you're interested in trading spreads, Webull will allow you to do this with $0 in commissions. If you sign up with the affiliate link provided in the bio, you will get 12 free stocks. If you deposit $100 US, Webull will give me a free stock as well. So much appreciated. Any questions, comment down below in the comments, and follow this channel for more stock content.